Hello, everyone. Welcome to another episode of the Index podcast, where we come together every couple of weeks to discuss on chain data, chart crimes, and metrics that move the crypto industry. With me today, I have Danning, on chain corgi at Flashbots,
Hi.
Tom, who's the head of data at Entropy Advisors, Ali, who's a data analyst at Entropy Advisors,
Hey everyone.
and I am, of course, Boxer, and I'm the community powers at Dune. Before we start, nothing we say here should be relied upon as legal, financial investment, tax, or even life advice. We are acting independently of our respective professional roles. With that, GM, very happy to have both of you here. And I think Tom might be a character that our fellow data wizards are familiar with. But for anyone who doesn't know, maybe Tom, if you can give a very brief introduction of your journey through crypto so far.
Yep, absolutely. First of all, thank you for having me here. My journey, I joined Entropy Advisors about 8 months ago. Before that, I was at 21 Shares where I kickstarted my crypto career. I joined as a research analyst at their team, and then we helped the team to build out the Dune profile. And I believe now they still one of the top 5 teams. And from there, I learned a lot on chain analytics, built up my profile there, built up a lot of interesting dashboard. And about November, December last year, I joined Entropy Advisors because back then I was slowly transitioning, not only handling on-chain analytics, but also on the business development and strategy side. And given the real passion being a data nerd, of course, I want to step back into full-time doing on-chain analytics, right? So I joined Entropy Advisors with the fact that I can fully go crazy on dabble into different topics and different in the trenches essentially. So I'm really glad to be Entropy Advisors and work with Ali, a really talented data analyst, alongside and learn within the team as well.
Yeah. Yeah, lots of wizards kind of over time they get pulled away from the trenches. I like how you structured your life in a way where you're like, no, I like the trenches, get me back in there. So yeah, very interesting. And maybe Ali, a few words about yourself as well.
Yeah, absolutely. As Tom said, thank you for having us here. It's a pleasure to be in this podcast. And yeah, I started my on-chain analytics journey, I would say, right when the Terra Luna collapse happened. So roughly 4 years ago. And yeah, I've been doing mostly on-chain analytics on a project basis and as a freelancer because I was in the process of moving to another country and also I was doing my studies, so wasn't able to fully commit to a full-time role. But since the end of last year, I was started just looking for full-time roles, and I was lucky to uh, be at Entropy Advisors since the beginning of this year. And yeah, since then I've been spending all of my times on Arbitrum data trenches. So yeah, here we are right now.
All right. And with that, that's a fantastic bridge over to what is even Entropy Advisors. You just said Arbitrum, but maybe so Entropy Advisors and Arbitrum, of course, are not the same thing. So maybe if you could kind of tell us what does Entropy Advisors do, what's the relationship to Arbitrum. I think that would be a good start to the conversation here.
Sure. Entropy Advisors, I'm sure a lot of people probably haven't heard of that because it is a super young company. It is founded by Matt and Sam, who was previously at Blockworks Research. They're the very first research analyst that they hired there. But seeing the opportunity that the Arbitrum DAO can provide to them, and also the gap within Arbitrum DAO, because before Entropy Advisors joining Arbitrum DAO, the governance operation isn't as effective as it is today. And seeing this opportunity, Matt and Sam just quit their jobs and sign an exclusive deal to work exclusively with Arbitrum for 1 year. An interesting fact is that we recently also passed our upcoming engagement with Arbitrum DAO as well. So we were going to work with Arbitrum DAO for 2 more years exclusively. But what value do we provide to Arbitrum DAO, right? So of course, at its core, we started this company focusing more on governance, right? We help the DAO to become more efficient, more lean. And throughout the period of our service, we also expanded our service and value to not only focusing on governance, right? We also expanded to treasury management. We also expanded to incentive design. And of course, we also expanded to data, right? Because all of these area of aspects, something that Arbitrum DAO really needs, and something Entropy can also grow into and provide a really high quality service to Arbitrum DAO. And speaking of data, we actually just started the data team in December, so it's like shy of 1 year. But I'm glad that we already have three really talented members in our team, including myself, of course. So we have Ali, and of course, a shout out to Phil, which is also another member in our team. That now we're mainly focusing on providing a lot of data insights, really in-depth analysis on Arbitrum DAO, and its ecosystem projects as well. For example, we have built out a very comprehensive dashboard list like Fluid. We've analyzed the liquidity layer, lending protocol, and DAX protocol for Fluid built by Ali. And we also built out a range of Ethena dashboard. As you also know that Ethena will be building an Orbit chain via Arbitrum Orbit stack. And therefore, what we are offering is not just servicing Arbitrum and Arbitrum DAO, right? We also want to expand our service to the builders on Arbitrum. So that imagine if a application built on Polygon or built on Avalanche versus building on Arbitrum, we will have the support of helping them to get the insights, getting them the momentum that they want via data compared to other ecosystems. So that is something we can offer in addition to what we're existingly offering, so that Arbitrum can gain an edge against other ecosystems. So that's the long story short here.
That's a lot of ground to cover. How many people are at Entropy today?
I think we have 8 people right now, right, Ali? I think we have 8 people, and 3 of them are in the data team. The rest of them, they either dabble, like we all support each other, obviously. So we also dabble into governance, we also dabble into incentive design and whatnot. And other teams also support us in terms of building the data dashboards and whatnot as well.
Okay. So you're one of many organizations working towards the Arbitrum DAO. And I think let's maybe kind of like focus in on the specific areas that you're active in. So one obviously being data. I think that one we can take as the last point and kind of like dive deeper, since that's your team. But the other two are like incentive design and treasury management. Maybe if you could lose a couple words about like what specifically you're kind of facilitating there.
Right. So let's start with treasury management. So it also relates to what we want to cover today, because Arbitrum DAO is actually one of the DAO with a huge treasury. I believe is even one of the top 10 DAOs with in terms of treasury size. So far we have around 1 billion TVL, or like treasury assets. In terms of, most of them obviously is ARB token. However, we're also expanding our revenue stream, right? Our core product or core business stream is Arbitrum One Network, and we receive ETH token in like revenue or going to the treasury, right? However, if it's just sit there, obviously what you're losing is the staking reward. And therefore, we want to diversify the treasury, obviously, because in the past, when the treasury management program hasn't gone live yet, about 99% of the treasury is composed of ARB token. And as you can imagine, during market downturns and market turmoils, a lot of those treasury size will just decrease drastically, right? Because most of the treasury assets just composed of your native token. You're not able to diversify that. So a good way to diversify in what we've done in the past is invest some of the ARB token into real world asset or real world strategy. And therefore, some of the asset that we're holding right now in the DAO is Buildo, which is by BlackRock, Benji by Franklin Templeton, and so on and so forth. So far we are holding 8 real world assets, tokenized US Treasury. And so far the tokenized US Treasury size that the DAO holds is roughly 46 million. And aside from that, we also have we are also leading some of the other treasury management program that is outside of the real world asset strategy, which is ETH correlated strategy, which involves investing the ETH into, for example, like lending it on Aave, lending it on Fluid, stuff like that, so that we can also earn some passive yield from there. But so far, any question before I dive into like the incentive design?
No, actually, I think I would like to go deeper here. Maybe do you have a dashboard on this that we could quickly take a look at?
Yep.
Because this is all like I think I overall I understood these topics, but yeah, maybe taking a deeper look real quick.
So this is the dashboard that we built for Arbitrum. Obviously, when you make decision for the Arbitrum DAO, you need to know how much you actually own, right? How much you can actually use it, right? And therefore, we built this dashboard with the intent that it helps the Arbitrum delegates the industry to know what is the current status quo of the Arbitrum DAO. So far as you can see that how much the DAO is actually holding, 1.4 billion. What is the ARB concentration, right? Right now it's about 89%, but when you see a historical distribution, the ARB amounts actually contributes to, as I mentioned earlier, right? 99.6%, but right now has been slowly diversifying into different assets. You can see there's ETH, there's Aave, Repstake ETH, Bodo, Fluid, Web ETH, Benji, USTPL, Wisdom Trees, tokenized US Treasury, so on and so forth. Any other questions so far? Any other specific point that you?
Yeah, how I mean, treasuries or like companies like to call this strategic diversification, which is basically you're dumping on your token holders or or not. So I'm wondering like how concretely does the Arbitrum DAO kind of like diversify? Is this net new income and that's why the percentages shift, or is this the Arbitrum DAO selling, I don't know, to market, like they're not like, I don't know, selling in a million stacks into the Uniswap pool, I would assume, but rather work with whatever Wintermute or something. But like, how does the Arbitrum DAO approach this?
Right. So there's some like nitty gritty that we might not want to dive into, but essentially the DAO can't really execute on the trade directly, essentially, and therefore we have a very good counterpart, Arbitrum Foundation, that would help us to negotiate or deal with other third parties that we might need to use their service, like a market maker. And therefore, once the budget has been approved by the DAO, for example, whenever there's a treasury management program or a DAO initiative, for example, for an incentive program, right? Everything needs to go through a DAO proposal. And once it has been approved, the DAO will just send the approved budget to the allocated address. And the allocated address can be like the Arbitrum Foundation, could be the DAO delegates address, so on and so forth. And then they will take it from there and do the conversion for us. And then once they get back to USDC, they will execute on whatever strategy that we need to, so that we get the end goal that we want. For example, it would be Repstake ETH or any type of tokenized US Treasury.
Oh, interesting. That all needs to go through the foundation. Does it always go through the foundation?
Most of the time, yes. But then if you are interested, we also go through, there's some like DeFi protocols that we're using. We're using sometimes AirVault, which is built by Gauntlet for like different initiatives, but not specifically for treasury management. Sometimes we use Hedgy Finance, but it's just for vesting, not for liquidating up. We also dabble into like other protocols, but we never, as far as I know, never sell it directly on DEXs.
Yeah, I mean, the MEV opportunities this would open up,
Right.
and like all of the associated overhead. Like I've a quick brain fart on my part. Like this would not be great to do via DeFi. I mean, lending and stuff you could do, like just deposit stuff into Aave, but for that you first need to actually acquire some other tokens, right?
Right.
But to this was a very long-winded answer to say there's a strategic diversification happening. So
Yep.
like the Arbitrum DAO is selling ARB tokens, and like with like the buy-in of the Arbitrum token holders, right? Like they're voting on this, and they're saying like, hey, this is all right. We want this to be a long-term sustainable thing. So do sell them at a fair market price, and like everything's cool. But I just wanted to work that out. So
So trying to understand, like, so treasury management, like, what's the end goal of it? It sounds like to me to diversify really just to basically not to only hold ARB because of the risk of like the one direction of price movement. Like, how do you guys pick the token there? Because I feel like if the goal of treasury management is to keep the value going up and like stable, wouldn't you pick like Bitcoin, Bitcoin kind of thing? Or I feel like it's a list of tokens that's somewhat random. So I'm curious, like, how is assets being picked?
So we do have a committee to select the assets that we want, and there are several considerations, right? As a DAO treasury, one of the key considerations is on the risk side, and therefore a lot of the component is that even though, for example, a DeFi opportunity can be yielding like 20%, 30% APY, right? But that won't be an opportunity that we would dabble into given the high risk component. Bitcoin wise, while it is obviously one of the largest crypto assets in the space, probably lower volatility than ETH. However, given the positioning of Arbitrum right now is more ETH aligned, we're obviously a scaling solution for Ethereum, and then we're also receiving ETH as a revenue from Arbitrum One and other networks as well, and therefore we don't want to sell ETH right now. And the only way to do so to generate more yield is to bring it to DeFi opportunities or either liquid stake it, right? And when it comes to more like selecting what types of assets specifically, I would think of as real world asset, right? There's a lot of applicants that want to be part of the Arbitrum DAO Treasury Management Program. What we do is, in the past, we selected several experienced committee members, either service providers or within the DAO, to help select which providers or which issuer is providing potentially highest yield, best legal structure, most cost efficient way. For example, some of them may have creation fee, redemption fee, or some of them may have a higher management fee. And comparing all those considerations, we will be able to shortlist a range of issuer, and then the committee will bring that shortlisted asset bring back to the DAO, and then they can just do a last round of vote whether they approve the selected asset or not, and then we can go through the creation process of holding those asset in the future.
Why are those asset issuer wants to be in the treasury? Like, I'm curious their incentive, or as in like, what's the intention of being in the treasury for those people?
I think right now a lot of the use cases for tokenized money market fund is just to serve the crypto foundation, right? It obviously suffice the benefit of both worlds. Obviously, the issuer can increase the AUM, they charge more management fee, and from the network perspective, right, it is like a very good marketing
Right.
option. It's like a stamp of approval. We can tweet, "Hey, BlackRock launch on Arbitrum," or "Hey, BlackRock launch on Apto," something like that,
Yeah,
right?
yeah.
So that is a win-win on both sides. And specifically for Arbitrum DAO, what we're doing is not just doing it for the marketing journey, right? We actually need to use those yield to potentially in the future, while we're diversifying the asset right now, is not just to diversify it, but also potentially earn yield on those assets so that in the future, once we want to cover different types of expenses, right? Let's say we hit 500 mil diversified asset that is outside of ARB that is generating yield. Potentially, you can just use that interest to power any type of activities like incentives, powering the OPEX for different DAO programs, so on and so forth, so that you don't need to just juice it out from the ARB token incentive, and then you can like self-sustain in the long run. So that is the idea or the goal of Arbitrum DAO.
Yeah, it's like any other company or startup. It's like increase your runway so you can actually build out the vision that you set out to build, right? I think maybe one one like additional comment on the using DeFi and stuff. It took the Ethereum Foundation that's, I don't know, 8 years to start using DeFi. So I think the Arbitrum DAO being a bit more, let's call it flexible, in those endeavors, and actually like you can put a proof of like you use the technology yourself, which is like a signal into the market, right? It's
Yep.
like the Arbitrum DAO itself is like it trusts its own technology enough, unlike the EF for much of its existence, to actually use it and put their money where their mouth is, which I think is like that's a super strong signal into the market. So like especially kind of like diving down into the RWA thing, and like really making sure that like, hey, let's support those builders and let's work together with institutions. And then like once we've actually gotten them onto the chain, let's also make sure that there's like sufficient AUM, which then in turn probably like bootstraps some liquidity. I don't know the exact mechanisms of all of this stuff, but there's like a flywheel effect, right? So like it's a smart move. It's a benefit for everyone.
Exactly. And before we dive into other topics, do you mind if we go a little bit segue here? Because earlier we mentioned a lot about DAO votes, we mentioned a lot about like governance stuff, but we haven't dived into how the mechanism is, right? But Ali here is the expert here because he built the governance proposal dashboard, built the delegates dashboard, and he's the best person to introduce everyone in case that we don't have the context behind it. What is like DAO governance, right? How does it work? And who are the delegates behind who is voting, right?
Yeah, super interesting arc to go down. Show us who's approving dumping the ARP token.
Yeah, sure. I mean, in general, the DAO governance is like a multi-step process. So everything starts from like the Arbitrum forum. So all the discussions are happening on the forum, from like random discussions to really like serious proposals that are going through multiple rounds of like discussions and comments and feedbacks. So in general, any person that wants to like submit a proposal on chain needs to first submit it as a forum post. It needs to at least be on the forum for 1 week in order for others to be able to review it properly, provide feedback and comment. And then after that 1 week, the proposal needs to go through a snapshot post, which is like an off-chain voting, basically. But it acts as like a temperature gauging mechanism to see whether the voting behavior aligns basically with what people said on the forum, for example. And after a proposal reaches to like a certain point of votes on a snapshot, because on a snapshot there's no quorum, for example, but people usually uses the non-constitutional quorum, which I will dive into what they are shortly. People usually use the non-constitutional quorum in order to gauge like the snapshot result, and then if the snapshot voting is successful, the proposal is being proposed for an on-chain voting on Tally, which at least takes like 2 weeks. It can be extended to like with another 3 days. So in general, for one proposal to get the DAO's approval, it needs roughly 4 to 6 weeks to go through this whole process. It might take longer. For example, some of the more important proposals, like those affecting the Arbitrum network or those which requires more funding, let's say in the scale of like millions of dollars, they usually take longer in regards to the delegates to basically discuss and provide feedback on the forum specifically. So this is the process. And basically after the proposal is being submitted to the Tally, there are two main types of proposal that you can submit. One is the constitutional proposal or core proposal. There are two terminologies that are being used interchangeably. Those constitutional proposals are the ones that affecting the Arbitrum network itself, and also the other chains, for example, Nitro, for example, Orbit Stack, or basically the core network or the smart contract, or on a smart contract level. For example, time boost, whether you want to modify the sequencer or anything that is affecting basically the network on a smart contract level, needs to be submitted as a core or constitutional proposal. At the same time, there is like the non-constitutional proposals or the Treasury proposals, as the smart contract is called. Those type of proposals are the ones that you basically want some funding from the Treasury. So when it's about transferring funds from the Arbitrum DAO's Treasury into another address, into a delegate, or based on the outcome of the proposal, it will be like a non-constitutional or Treasury proposal. So here, since we have two types of proposals, there are two quorums that basically are different from one another. So for a proposal to get the DAO's approval on the on-chain voting on Tally, there are two main requirements. One is that it needs to have at least 50% for votes in comparison to the against votes. So for votes need to be more than 50% or more than half. And also the summation of for votes plus the abstain votes needs to be more than the quorum. So for the non-constitutional proposals, sorry if it's getting a little bit complicated, but yeah, for non-constitutional proposals, the quorum is at 3% of the votable tokens. For constitutional, it was originally 5%, but recently a DAO proposal has passed that decreased it to like 4.5% of the votable tokens. I can share the dashboard, by the way, and show some numbers if you guys think.
Wait,
that would
let's
be like,
quickly. 3% and 4.5%.
Yes.
Wow. The voter. How do you say this? Apathy is like, if this was a nation state, I'd be like 3% of people voted. You'd basically say like democracy is not working. What are we doing?
No. 3% of the votable tokens. So
but like the quorum's 3%, which basically means like as long as 3% participate, then the vote will actually be like actionable, or like you will actually be able to implement whatever changes have been. So like if somebody submits a proposal that's like, okay, give 500,000 to Ali, and then miraculously you gain 51% of the for votes, and like in total like more than 3% of people have voted, then that proposal will actually be implemented.
Yes, but it's not obviously that simple. We have some metrics in our delegates dashboard, which basically measures the decentralization. You can put it that way. So right now, the number of top delegates required to vote on a proposal to pass for a non-constitutional proposal is 11. For a constitutional proposal is 19. So I know that it might not sound a lot, but honestly, aligning 19 players on a DAO is a really tough job to do. So it's not that easy.
So these numbers are, they come together basically only like if you get the votes of the top 19 delegates, then do you reach 3% of all eligible tokens. Like
votable tokens. I can quickly discuss what votable tokens is. So there are 10 billion ARB tokens in circulation. But in order to be able to use those ARBs in DAO governance, you need to delegate those ARBs either to yourself or to another address. There is another option as well, where you can exclude your ARBs to be used in governance. So all the ARBs that are being held by like Arbitrum Foundation or are within Arbitrum Treasury have been excluded from the basically governance. So right now, 4.5 billion of the ARB roughly has been like excluded. So the remaining will be like the remaining, which is like 4.5, is called the votable ARB tokens. So the 3% and 4.5% is 3% of that votable token, or that 4.5%, which right now roughly translates to, let me pull the numbers, around 200 million ARBs for constitutional proposals and around 135 million for a non-constitutional proposal.
Okay.
In my go ahead.
One quick thing to add is that the votable tokens, the base is large, but then the delegated tokens is actually the amount of token that can actually vote. So that you can see that the actual amounts of token that can actually vote is around 300 mil. So if we have the 5% constitutional quorum, it actually means that you require like 60%, 70%. I'm not good at napkin math, obviously, but like, that's a rough amount there. And earlier, Ali shows a really interesting graph. I like that a lot. Is the number of top delegates they need to collude together, right? So essentially, when you scroll up a little bit, you can see the top delegates of Arbitrum DAO, right? So imagine the delegates here, like Entropy Advisors, need to collude with L2Bit, collude with Gauntlet, collude with Blockwork Research, Pantera, Wintermute, all these guys in order to gain control, right? So essentially, it is a very, very difficult job because most of the people have different agenda, different incentive, different interests, and therefore, right now, we believe the DAO has a really strong, secure mechanism. And in worst case scenario, right, we also have a security council. Let's say worst case scenario, all those delegates collude together, right? 19 delegates collude together. But we also have a elected security council from like really respected members in the crypto industry that can come together and stop any malicious proposal that can pass through. But unfortunately, as you can see, that that's a little bit centralized, and therefore on L2Bits categorization, we're still at stage 1 roll up partially due to that reason.
Okay. So I want to quickly calibrate everything. So there's a total amount of supply of the token, and there's a whole funnel, right? Like going down, only half of it is votable token, and out of the votable token, only a small amount are delegated. And actually, the only delegated votable token can actually vote. And this 3% was like out of the votable, but out of the delegate, it's actually like 60% or something, as you said. Got it.
Yeah, true. Actually, the recent proposal that was proposed to basically decrease the constitutional proposal was to be sure that mostly it's been affecting the constitutional proposal because most of the non-constitutional proposals haven't had any issue on reaching or hitting the quorum. So the concern came from the constitutional part or the core proposals. So they suggested to decrease it by 0.5% shortly, I mean, for a short period amount of time, in order for the DAO to be 100% sure that every core proposal will hit the quorum. I mean, it hasn't happened before that, for example, for any proposal that weren't available to hit the quorum, but it was like more of a precautionary measure, I would say. And yeah, that was basically it the rationale behind the proposal was to address this concern.
Yeah, got it. Makes sense. And yeah, that was my next question, but you already covered it, which is like, who are the people who are holding this token and are voting for the governance? Because like we know famously, a lot of the other like governance is like held by one big investor, like to like veto the fee switch or this and that, and like ACCD and others are famously like kind of like in the table of most of the major DeFi protocols. So here, this table seems to be actually a lot more decentralized to see because like, for example, Entropy Advisor is actually the highest voting power here, I guess, looks like.
Yes.
Not even Pantera, I guess, a major investor. Yeah, super cool, I guess. what would be a benchmark, I guess, like in terms of like how decentralized is it healthy here, what we are seeing or not, and is it above like the overall governance healthy level these days among all the projects?
I guess this is a little bit subjective. If we want to put like a number on it, for example, on the number of top proposals in order to be able to vote on a constitutional or non-constitutional proposal, so that we consider that, for example, decentralized or not. Because I think maybe one aspect that people who might not be familiar with Arbitrum don't take into account is the fact that each of these delegates, not all of them, of course, but some of them are like companies or organizations. So it's not like you go to one person and convince them to like, okay, come and vote, for example, for or against this proposal. Each organization has their own agenda. All of them are aligned with Arbitrum. So they are thinking long term, and it's not like you can convince, as I said, like one person and basically get their vote. So it's much more complicated than that we look on the pure number, I would say. But yeah, I think in my personal opinion, of course, this is like subjective. I think, as Tom mentioned, Arbitrum is sufficiently decentralized, specifically in comparison to protocols or other L2s, because there are lots of large delegates involved and needs to be aligned on one particular proposal. So specifically when there is like a treasury proposal that needs to transfer a huge amount of funds, there are multiple rounds of discussion. So as I said, usually it takes 4 to 6 weeks, but for those type of proposals, it might take like at least a few months, so that you basically make everyone align, take into consideration every delegate's like opinion and how they see, for example, that particular program to pan out.
Do these all happen like async in like forum, like text forum thing, or do you have like a community call or kind of thing?
Yes, both of them. There is like the Arbitrum forum, forum.arbitrum.com, if I'm not mistaken, which basically is where all the discussions happen. And there are some community calls organized by L2Beat. There are like bi-weekly and weekly calls, monthly calls. So they go over like the whole DAO, what's being proposed, and it's basically a platform to give people in order to be able to discuss, for example, their proposals. So it's not only on the written form, but also people have the opportunity to share what's the rationale, for example, behind one particular proposal or why they are against it. So the proposal's proposer basically have a time in order to discuss the specifics of a proposal, and others can address that, for example. Just to add to that, for some initiatives specifically that are more important or there are more discussions, there are specific talks, for example, in regards to SOS or code of conduct or, for example, treasury management. There are specific talks, because when it's like a bi-weekly or monthly call, of course, there are multiple topics that you want to address, so you can dive deep into one particular topic. But when it's only about like treasury management, you have like 1 hour to address a delegate's concern, like different opinions and perspectives.
This will be the proposer of the proposal will kind of like organize and host these things to iterate on their own proposal.
Yes and no. They are not directly basically managing the call. Most of the calls are going through the Arbitrum Foundation and L2Beat. They are basically co-organizing these calls as like a public service, for the whole DAO. But for example, if I'm a proposer of a particular proposal, I can reach out to them and be like, please allocate like a slot to me so that delegates can come and discuss this particular proposal.
Yeah, makes sense.
Also, another thing to mention, sometimes the on-chain proposer is not necessarily the proposer of a proposal, because in order for you to be able to propose a proposal on the Arbitrum DAO, you need to, I know that it sounds funny, but you need to have at least 1 million ARBs in order to be able to submit the transaction. So, for example, for a smaller delegates, they basically submit the proposal to the forum. It goes through the discussion, and another big delegates basically submit the proposal, but that submitter basically is not the owner.
It's like on their behalf.
Yeah, on behalf.
Yeah. How much is one ARB token at the moment? $2 something?
No, I think it's around 40 cents.
Okay, so 400,000 in capital. Just theoretical. I'm just kind of like thinking about this. I think that there was one interesting thing about this, the list of delegates, which was number of delegates. So like I think you guys have like 52 people who delegated their money to you, but you have 7.25% of the votes or something like this. Do you know who delegated to you? Like, is this like a known thing? You're shaking your head.
It's all.
Okay. I don't quite believe that, but
All the
fair enough.
Wizards fan on Twitter following Tom and Ali.
Yeah. No. But so that was like one. Like, so you literally have no idea.
No.
Okay. So these might just be like some Arbitrum whale who like sees, hey, Entropy Advisors is doing good work. So let's delegate to them. And then there was something further down the list, which was Olympio.
Yes.
This must be some kind of like voting mechanism protocol or something like this, because they had like 14K delegates or something like this, which like hugely like out of the normal distribution of this.
Olympio is one of the OG delegates on the Arbitrum DAO. He or she, or if an entity is behind the account, has been active on the airdrop farming side of like Web3. So the account has so many followers, and that's why it has like this amount of delegation basically. But yeah, there are some, I would say, I think concentration is the right word for some delegates. So for some delegates, like the number of delegators are lower, for example, or there are fewer delegators with higher delegations. But for example, in Olympio's case or L2Bit's case, there are more delegators, but maybe with lower amounts.
Yeah, makes sense. It's like, do you get retail delegators, or do you get like the institutional delegators? Or I think there was also Pantera Capital on there. They probably just delegated to themselves, I would assume.
Yeah, you can basically own the ARB, so that's also one option.
Yeah,
so
of course. Like if you're an investor and you're like, I'm not gonna like, I don't know, do like delegators to some university blockchain club to then kind of like do my bidding, but you're just like, okay, I'm just gonna do this myself. Like that's totally fair, right? But okay, interesting.
There was one address that has no label, so it could be like a whale, it could be like CEO of Offchain Labs. I don't know.
It's the CEO of the super chain.
Oh, that'll be spicy.
Somebody's running dark ops.
That'll be spicy.
And another interesting point in regards to that address is that it hasn't participated in any of the proposals. So it just holds the ARB and is one of the big delegates and don't want to participate or elaborate further.
So here's my next question, right? So like with all these process going on afterwards, I wonder like what is the biggest grant has ever been given out by the DAO, and like where can I track all these? Because like I think historically, holding the governance proposal accountable has been notoriously an issue. So like oftentimes the DAO gives out like $1 million or $100 million like grants, and like we don't even know where to track them. So I think you guys have like a financial dashboards. I don't know if that will be basically addressing this point, or if you would be.
I mean, there's also incentive management, right? This should be broadly broad. Like if you're giving out money, hopefully you get something in return.
Right. So we have a range of dashboard that tracks that allocation and the ongoing spending as well. So we have the governance proposal dashboard, which Ali shown you guys earlier. We tracks all the governance proposal how
Can
much.
we actually can we go in there and look at a few proposals
Yep,
just so like we and our listeners become like get a feel for like how many is there, like how often do they happen, like what is the actual voter participation, like how many people do vote on these? Is it every week? Is it every month? Like how can I imagine all of this?
I can quickly hover through the basically allocations. So, and then Tom can address like the financials aspect of things. So here in the governance proposal dashboard where we have like the proposals themselves, we also have this section that basically addresses the allocated funds to each of the treasury proposals. As I said, constitutional proposals usually aren't about the transfer of funds. So these are the treasury proposals. So the most recent one, for example, is the DRIP, the DeFi Renaissance Incentive Program, that is set to go live in a couple of weeks. And the budget, the requested budget was 18 million ARBs, which at that here we have like the value at the time of the transfer, but of course the details of like the expenses and basically how this amount of ARB is being used. We have those values in our other dashboards. But yeah, as far as the largest amount, it was for the we call it like catalyst gaming ecosystem growth on Arbitrum, which was an incentive program that basically allocated funds to different gaming protocols of Web3 gaming related projects. Right now, it is being renamed to AGV, Arbitrum Gaming Venture. So AGV is basically managing
They're
these
just a
funds.
VC funded by the Arbitrum DAO.
Right, that is the perfect way to say it. It's like a separate entity that's spin up from Arbitrum DAO.
Wow.
So similar to like Entropy, right? We got funded by the Arbitrum DAO to do governance, do incentive, do data. AGV, similarly, they got this funding as a separate entity to invest into different projects to grow on Arbitrum. But the difference here is that when it comes to an investment program versus a grant, what we're getting in return is not like nothing. Like grant is more like we give it out, hoping that you build on Arbitrum continuously, you align with Arbitrum. But in an investment program, what we're getting in return is equity or potential token in return. While we may not see the return in like 1 year to 2 years time, but hopefully in a longer time horizon, we'll get more in return in terms of like equity token as well. So that is a little bit different and some nuance that we're seeing in terms of like investment program versus grants.
Okay, looking back on the Arbitrum Gaming whatever fund, was this a good idea?
I don't think it is like sufficiently conclusive yet, given it is just like 1 year of time, right? Obviously, we have
Yeah.
made several investments so far, but like when it comes to like venture investment, you kind of like look at it for like 1 year horizon, right? Usually, it's like 5 to 10 years. Like in TradFi time, Web3 could be a little bit shorter, but gaming hasn't been a popular trend in crypto, right? So let's see how it goes. But overall, I'm optimistic because that could potentially give Arbitrum an edge compared to other ecosystem where doesn't seem to be having a lot of ecosystem that focus on gaming nowadays, mostly on DeFi, RWA, so on and so forth.
I would like to
You're
add.
you're a very good politician. I can see why you are Entropy. This was a very great answer. Yeah,
I would like to
no,
add one point, if I may, in regards to these funds. For example, in regards to the AGV, not all of the funds basically have been used right now. So most of the funds have been are available right now. And also there is a nuance, let's put it that way. When you allocate a budget to a proposal, and for example, at the end of the mandate, if they don't use the full budget, they will return the remaining amount to the DAO. So, for example, for the AGV or the Gaming Catalyst proposal, 225 million has been allocated, but only a small portion of it has been used. And at the end of the program, if they don't use basically all of the funds, they will return the remaining to the DAO.
Yeah, fair enough. From an outsider perspective, I've heard some criticisms of this maybe. And I think even at the time it was like fairly controversial to be like, okay, we're gonna spend 225 million to like kind of like start to build a gaming ecosystem. Where other crypto companies have already tried this. Gaming has always been kind of like, it's gonna come soon, and like we only need more investments. Like so far, I think the space in total has probably sunk a couple billion into all of these random gaming companies. And like I haven't heard of anyone actively playing any Web3 games other than maybe Axie Infinity in the Philippines, where people were earning a living doing that. But I haven't heard anyone like actually playing for fun.
I will play the other side of the argument, right? Because I think like right now, none of the like consumer apps or like the user and consumer side thing has taken off. But like if one day there's like an Angry Birds but like crypto version on Arbitrum, and everybody gets like just so addicted to it, like it goes viral. And I'll ask you this question again, see if the return's good. So you really can't say. And I think like again, like if they put it in like an investment kind of lens, then you can't really see anything within 5 years or even 10 years. So we'll have to see.
I would add to that also another edge that Arbitrum might have in comparison to the other DAOs is because it has this large treasury that they can allocate funds to these initiatives and see basically how they perform. Other DAOs, for example, or with smaller treasuries might not have enough room to experiment with these, for example, venture funds or initiatives. But Arbitrum has this advantage that it can basically move into a new initiative or a new sector, basically, and see how it plays out.
What is the, how to say, I guess like to follow along the line of thoughts of like to hold these proposal accountable, is it like per quarter check-in, or how does the DAO like communicate with them in like a midterm check or like over like a certain time length? Is there anything like that?
So every program manager is supposed to share at a certain cadence, mostly monthly cadence, to share.
What's a program manager? Sorry.
For example, let's say AGV would be the program manager for the Arbitrum Gaming Catalyst program, right?
Okay.
And for example, other like program manager would be, for example, like DRIP, like the DeFi Renaissance Incentive Program, the program manager here, which is something like the lead in this program, because once the DAO approve the program or initiative, right, you need someone to lead that program to be accountable for that. And sometimes we call them program managers so that they would be the key personnel to report back to the DAO how much we have spent, what we have spent on, so on and so forth. And in here, what we want to also provide in terms of the data side is also, aside from the governance dashboard, which tracks the allocation, we also have the Treasury dashboard we showed earlier. But what we are tracking right now is what is the current account size. For example, we'll be able to see on-chain transaction, which transaction or which transaction inflow, outflow it is going to, so that everyone can kind of audit that or track that in real time. But one caveat is that sometimes these programs do hold funds off-chain or on Saxes. So in this way, you can't really track that fund movement on-chain. So potentially, well, what we're seeing on-chain for example, like let's say the gaming catalyst fund is still holding 200 mil up, but potentially they can still hold 10 mil up or like 10 mil USDC on Binance, for example. So therefore, there could be some blind spot that we are showing on the dashboard right now. So that's one caveat. And in terms of the financials dashboard, because we also want to understand how much the DAO is actually spending, right? In terms of how much runway we still have, how much actual spending we have. And therefore, when we build that financials dashboard, we are aiming to provide it as like a traditional finance lenses so that we can compare the income versus expenses, right? So that we can kind of continuously track whether the DAO is spending or earning sustainably and how much runway we can still have in terms of like 5 years, 10 years, 20 years time, or how can we sustain ourselves in the future.
Do you want to quickly show us like the dash and like I'm curious what's the biggest spending for Arbitrum DAO? If
Right.
if Boxer you have a guess, I don't know.
Do we count investments as or like grants as running expenditures? Is that a
Yep.
thing? Like how does that? How would you differentiate between kind of like the like giving the AGV or however that gaming thing is called, like giving that many tokens to them? Like you probably don't like there isn't a 225 million cost associated in that month. So like you account that over like a certain period of time, or is that like something else entirely and you only kind of run operating expenses? Because like in theory it's like you give 225 million like ARP tokens away, or like 225 million in ARP tokens away, but like the value isn't lost, right? So like the value still exists within the balance sheet of that new entity, and the new entity is probably 100% owned by the Arbitrum Treasury. So it's like in the end this is kind of like a zero accounting, like this is just like some accounting event, but actually no real expenditure has been done. So like I'm curious, like I don't know what might be the most expensive thing, like maybe paying the Arbitrum Foundation for ongoing development work of like the Arbitrum protocol or something like this. I don't know if the Arbitrum, like maybe that's the thing. I don't know, maybe paying Entropy Advisors.
I would hope so, but obviously not. So far, let me share my screen. Boxer raised some very good point when it comes to accounting, because on chain, while it is transparent, however, a lot of the movement are still happening off chain. For example, here is a summary table. It could be a little bit overwhelming, but here is a summary of what we're seeing so far in terms of more like traditional finance lenses. Uh, but obviously, it can be overwhelming, confusing, and therefore, let's move to a more friendlier way for the listeners here, so that let's go back to the chart. So far, what you can see here is the cumulative expenses. So far, you can see the largest expense for the DAO is incentives. So far, since history, we have spent over $141 million in incentives. So when it comes to incentive, we're categorizing different DAO programs here. However, if we want to dive deeper into specific programs, we can always do that. We just change the parameter, and then we can dive into which specific program. So far, you can see that the short-term incentive program and back fund is actually the largest spending for the DAOs so far, with 100 million. But then we also have other incentive program in the past, like LTIP, which is the long-term incentive pilot program, which is also part of the incentive category that we show here. And in this case, what we're aiming to do here is to inform the DAO what we have spent in terms of DAO initiatives, but also you can see the second highest category here is core data, right? We also account the fee that we need to pay Ethereum for security as part of the cost that we're spending. And therefore, when it comes to the revenue, we may be getting too deep here, but essentially we account every single expenses into the graph here so that we can make a more informed decision. However, as mentioned earlier, how we account the expenses here is once the expenses is realized, meaning that, for example, when the DAO transfer the ARB token to the AGV wallet, which is the Arbitrum Gaming Catalyst wallet, it does not immediately account as expenses because the fund has not been spent yet. And therefore, what we will only account as expenses is only when that wallet transfer fund out of that wallet to an unknown or not Arbitrum controlled wallet. And by then, we will account it as expenses. So that would be the overview here.
Yeah.
Man, you guys must have done so much labeling and sleuthing.
Yes,
Getting all of
my
these
God.
addresses is insane. Well,
It's
wait,
it's so clear. It's so crazy. Actually, I can see all the expenses goes to which project and which like category. And I was wondering, like from even the previous dashboards, like when you label like a theme of the proposal and stuff, like are those all already on-chain data, like the governance protocol design, or you guys had to pull like metadata from foreign, combine that onto you, and etc.
we need to pull metadata directly from our team member. So proudly give a shout out to Brick. He is in our governance team. He is responsible for helping us categorize all the proposal, and therefore the edge that Entropy Advisors has is not only on the data side. So obviously, we're like talented in data, but without the help from the governance team, we won't be able to make this really informed dashboard, right? So that is a combination of the benefits of both teams, so that we can deliver this granularity to the users.
That's super cool. Yeah, and I mean, I think incentive could have been a best guess. It makes a lot of sense because like you as an L1, L2 chain, you probably is giving a lot of incentive for developer to build and deploy and like attract liquidity and stuff. Make a lot of sense. I wasn't sure if I understand like why the call data part is still a big part. Isn't that supposedly like being replaced by blobs? Is that what I'm understanding, or is that the call data to L1?
Yeah, that is the call data to L1, but the graph showing earlier is a cumulative chart, so it includes historical.
Okay.
Committing chart crimes live on the podcast. No, I mean it makes sense in the whole dashboard. But maybe if you want to pull up a chart of what you're spending on money right now, and then we can maybe look at the blob. I mean, you pay for blob space. Is that how you say that? Yeah.
Right. It would just be like super minimal, given like even the blob space right now isn't full, and therefore like every L2 is just paying like a super minimal fee. That is
but still, I think on that note, we also you're now also making revenue, I've heard, which is nice as a business. So maybe if you just want to go through the current kind of profit loss statement for the last couple months, and then we'll probably get to time boost via that angle.
Saw that. I already saw that in one of the return chart, and it's time boost. So yeah, please tell us everything about it.
So before we dive into that, one of the really cool features about like operating an L2 nowadays is the gross profit margin. And how we calculate gross profit margin is that we just grab the gross revenue, which is the transaction fee plus time boost fee, because time boost is similar to, or like akin to priority gas auction, which is similar to how we capture MEV, so that the total revenue after the cost is the gross profit margin. And therefore, we can see that the gross profit margin is actually super high at around 92% to 96%. And therefore, it has been a very attractive business for even TradFi firms like Robinhood to decide to deploy their own L2 instead of building on a L1. Because specifically for Robinhood as an example, one of the key differentiator that they have, and also obviously Securitize and Ethena have for building their own L2s, they already own that distribution, right? They don't need to get liquidity. They don't need to get users from Arbitrum One. They can just bring their own distribution power to their own L2. And therefore, in this case, what you can capture is a even higher upside, because what you're capturing is not only the Proco revenue, but now you can also capture the transaction fee, potential MEV capture via time boost of PGA, priority gas auction. And what you can also customize is the gas fee. Potentially, you can also customize which alternative DA you're using. You can implement a compliance layer. You can do a lot of customization on the layer 2 side. I know I'm like a little bit off track here, but this is a super cool graph to showcase why businesses nowadays are interested in building their own L2, because what you can see here is Arbitrum DAO has already experimenting or showcasing why an L2 nowadays is super profitable when it just comes at the transaction fee angle, right? Because the gross profit margin is very, very high. What you're paying to Ethereum is just a very minimal fee due to the blobs. Gas is just super low right now.
I fully understand all of what you're saying, but I think we need to make a differentiation here between like Robinhood coming in and basically using the Arbitrum stack, and like everything's ready to go and developed, and they can just deploy this with gross profit margins of 96%. Like that totally makes sense to me.
Yeah.
But in case of the Arbitrum DAO itself, obviously, like if we contextualize this as the whole dashboard, I just want to work out for our listeners. This is So there's a 96% profit margin on basically Arbitrum paying block space, and then the amount of money that Arbitrum has to pay to the ETH L1 in order to kind of like secure that block space through Ethereum, right? Like that's the very simple calculation here.
Right. Exactly. And just like some small fees that we're also paying for establishing the Arbitrum Developer Guild, but that is like super minimal fee that comes from the Orbit fee structure and the time boost fee that we can dive deeper into later on.
Okay. But yeah, like let's like if we like get even the salary of like 4 core developers in there, like suddenly this graph doesn't look like I'm just trying to make sure that like the listeners contextualize this correctly. It's not like the Arbitrum the Arbitrum DAO as an organization. Like all of this is like very weird, like accounting infrastructure and stuff. And like the statement here is absolutely correct. I just want to point out that like this doesn't really fully tell the whole story, even though it does. It will tell the whole story if somebody else can just use the Arbitrum Orbit stack and kind of like deploy their chain, and then like everything is already solved for, right? Because like development costs are like, I don't know, somebody else pays them, and then like maybe you pay whatever for a few integrations and info. Like I don't know, you pay QuickNote and like. I don't know. There's probably some Arbitrum Orbit fee as well, but like in general, like you can expect 90% profit margins, even though the margins on block space will probably trend down as time goes on as well. But that's a whole different conversation. I like fees in general are also trending down. So it's like, what does it even matter if like the fees are like whatever, you pay like a fraction of a cent for a transaction and you earn like 90% margin on that. It's like, yeah, at the end of the month we have like $30. Like, fucking, this is a great business. So like, yeah, I just want to contextualize this. I think this is an interesting like thing to look at, and like obviously like the introduction of blobs has really kind of like I don't know, made L2s a profitable business because you don't need to pay all of that call data overhead anymore.
Exactly. And you can see the gross profit margin just jump drastically once EIP 4844 implemented, like the blobs. So you can see it is coming from like 23% to like 90% nowadays, which is a very attractive business. But as Boxer mentioned earlier, there's like some other expenses that you need to pay when it comes to operating your own chain, right? If you want your own DAX, you potentially need to attract liquidity, either find an incentive or market maker. And if you have your own chain, you probably need to also pay for like roll up as a service firms, explorers, different tax toolings to help people to onboard to your chain, potentially integrate with different data providers as well. And that could potentially be other costs that outside of gross profit margin, but also a cost that you need to consider.
Yeah, call me for the Dune integration. happy to make any introductions. But yeah, very cool. So maybe let's actually move to the like, how does the income statement of the Arbitrum DAO look like today, or maybe on a monthly or weekly basis? I don't know how you guys.
Right now we're categorizing it on a monthly basis because while the revolution of data does not report quarterly, but we don't want to overwhelm our users, right? So we just keep it as a monthly interval for the time being so that we have enough data to show and like avoid showing too much granularity on like a daily or weekly interval, because we might not have like daily expenses that incurred every day. So the first part from the income statement is obviously the gross profit, right? The gross profit comprised of the total revenue and the cost of revenue. So how does it work from like a finance point of view is this part is essentially what your core business service is about. For example, the total revenue here is about Arbitrum One selling block space to the users. So in total revenue, obviously about block space, it includes transaction fee on Arbitrum One. It includes time boost fee, which is the new transaction ordering mechanism to capture MEV revenue. Last but not least is the Orbit fee, which is the Orbit licensing fee for Orbit chains to pay to the DAO to use the Arbitrum Orbit stack. So that comprises of the total revenue. The cost of revenue is the amount of fees that you need to pay to operate your business, right? Thinking Arbitrum One as a business, right? Or operating the Arbitrum DAO as a business. So the cost of revenue here would be the cost to post data on Ethereum, and the Arbitrum Developer Guild to set it up. For example, as I mentioned earlier, not all the revenue from Time Boost and Orbit licensing fee goes to Arbitrum DAO. So 97% of the total revenue on Time Boost goes to the DAO, and 80% Orbit licensing fee goes to the DAO, and the rest goes to the Arbitrum Developer Guild, so that we can continuously incentivize and help the Arbitrum ecosystem to grow in a continuous journey. But before I go to the rest of the income statement, any questions?
I'm curious, what are the chains in the orbit, Arbitrum orbit,
Right.
besides Robinhood?
Right. Robinhood would be a pending chain that hasn't launched yet, but obviously the most excited one. Converge would be another one that is super excited, but more like DeFi native. But speaking of the chains that have already launched, one of the chains that includes Ape Chain, which is by the ApeCoin DAO, but essentially focusing the whole ecosystem on the ApeCoin and the like Bored Ape Yacht Club ecosystem. Another NFT chain that we also have is called Anime Chain, which is developed by the Azuki team essentially. And then we also have some DeFi chain. We have a chain called Corn, which is also available on Dune. Corn is a chain that is focusing on the BTC-fi narrative. And the more newer one that includes Plume, which is a layer 2 built on Ethereum, but also leveraging the Arbitrum Orbit stack. They are more RWA focused, and that is also using Orbit stack. But there's like other Orbit chains that are available. And some of the cool facts that I would like to share is also when it comes to Orbit chains, there are several options that you can have. For example, what you can do is you can act as a layer 2, settle on Ethereum, which is fine. And then you need to pay the 10% licensing fee to both the DAO and the Developer Guild. Second option, if you don't want to pay any licensing fee, you can build as a layer 3 and settle on Arbitrum 1. And then in this case, you're already incurring value back to the DAO without needing to pay the licensing fee. Third option, interesting option and example, is that there's a chain called Degen Chain. They're actually built as a layer 3, but using Arbitrum stack, but the chain is actually settling on Base. So that is some flexibility that we can allow the developer to do. You don't necessarily need to settle on Arbitrum. You don't necessarily need to settle on Ethereum. You can settle on Base. You can settle on Hyperliquid, however you want. But if you don't settle on Arbitrum, you need to pay the licensing fee.
Mm-hmm. And the 10% is out of their profit or their revenue? Because I know, like, publicly, OP Stack Chain charges either 15% of their total revenue or 5% of profit, which now doesn't make sense as a model, because now the profit and revenue is very similar after Blobber become nothing. So like, why would you pick 15% of so? I'm just curious the comparison.
Right. The good question, a very good question. What we're charging is 10% chain revenue, which includes both transaction fee and any type of MEV capture mechanism they're using. They can choose priority gas auction. They can also choose time boost, however they want. But either way, then we need to that would be accounted into the chain revenue.
Got it. Cool.
Are you guys also
how much does Time Boost earn?
Yep. So Time Boost, let me go back to the chart on the above. Time Boost is a really significant portion of the DAO revenue nowadays. It is contributing to 43% of the total Arbitrum DAO income nowadays. But I'm sure the listeners would be interested in learning more about Time Boost's mechanism, right? And Ali can share a little bit more details here.
Yeah, absolutely. I would be happy to. As Tom mentioned earlier, it's an ordering mechanism added on top of Arbitrum's existing sequencing mechanism. So it is a sealed-based second winner auction. I think that's the right way to call it.
Okay.
So participants basically bid on an auction without knowing others bidding, and then the auctioneer basically chooses the highest bidder as the winner, but the winner only needs to pay the second highest bid. So there might be some differences between the amount. Basically, the amount, the top bid is, we are calling it the amount you're willing to pay, but you are basically paying lower than what you're willing to pay as the winner of the auction. So how does this actually work is that it doesn't give the winner like any sequencing capability, or like they can propose blocks. So they can only submit time boosted transactions. But how are these transactions different from the regular transactions? On Arbitrum, the block time is basically 250 milliseconds. Was 250 milliseconds before time boost. When time boost went live, the winner of the auction basically gets access to an express lane that can submit transactions within that 250 millisecond block time. The rest of the transactions that are not time boosted are artificially delayed by 200 milliseconds to 450 milliseconds right now. So this is like, in a really summary, I would say it's a really short summary of how time boost works. The auction, there is like a nuance on the auction side as well. So there are different rounds of auction rounds. Each round takes place for 60 seconds. And then at the end of that 60 seconds, the winner will have access to the express lane for another 60 seconds. So in the first 60 seconds, the auction has been going on for actually 45 seconds. So participants have 45 seconds in order to bid for the next round. It will take the auctioneer 15 seconds in order to determine the winner and give access to the express lane to the winner. And then the winner will have access for another 60 seconds to submit time boosted transactions. So that's the summary.
How many of them can I then one, or like multiple?
But how many transactions you mean? There's no limit. As much as you can fit in a block on Arbitrum. So you can fill one particular block with only time boosted transactions, or you can submit none. So it's at the discretion of basically the address who controls the express lane or the auction winner.
Wait, I buy the right to, in one block, put transactions at the very top of the block.
No,
block.
This is like the delegate nuance. I would say you can't reorder transactions, so you can't put your transactions on top of the block. It is still first come first serve. So if, let's say, there is an MEV opportunity and you fail to basically identify that at the right time, and another party submitted a transaction, a non-time boosted transaction before you, and you fail to submit your time boosted transaction, that transaction will go through first because that came first, basically. So I would say you have that 200 millisecond delay period between like a person who is submitting a non-time boosted transaction and you that basically have the ability to submit.
It's like you buy a capital and you can make other people slower, kind of, by one block ish.
Yeah, you can use that, of course.
Yeah, like when you play the game and you have like a sneaker shoes or like a scooter and just like run faster. that's how I visualize it.
Pay to win. Wait. So from a searcher's perspective, I kind of see there's a high volume DeFi activity. There's market volatility. I start bidding on time boost slots. Basically, like I submit my bid, then like the auctioneer like has its 15-second window, and then I know like, okay, now I have like my time boost is available, and then I can basically use that time boost to like boost some of my transactions. And like, is it one bundle? Can I submit one bundle, or like how what's the unit of account? Like how much stuff can I do with one time boost?
the unit is like 60 seconds. I mean, it's not
Okay, so in those 60 seconds, I could theoretically like submit 10K transactions.
basically you
Wow.
can say, okay, each block is 250 milliseconds, so there are 4 blocks per second, and it's 60 seconds, so there are 240 blocks within that 60 seconds, and based on the number of transactions per block, you can multiply that by 10 or 100 and get the total capacity, if we want to put it that way.
Okay, and then basically, like I'm just kind of like the sequencer gets time boosted transactions and it gets normal transactions, and I just have to I have the right to kind of like go in the express lane and kind of like get included inside of the chain earlier. But I'm not on top of the block, but rather this is just like an additional way to get onto the chain. However that works. Are there just time boost blocks now? Is that like a completely
No. It's the same block. I can.
Yeah.
Sorry, Danny.
So my understanding is that like you don't really change how the transactions are getting sequenced. It's like still first come first serve, right? So
Yes.
if someone submitted before you, they're gonna land before you. But if you are submitting, you can kind of manipulate how the time works. As in, like the time is flexible now. So like if you submitted like a time boost transactions, you are like ahead of others by this amount of time. They can only settle after that 200 millisecond.
Yeah, you put it perfectly. We also use the analogy of like pay tolls in the highways. So of course there are queues. In some of them there are like longer queues that you need to wait and pay like an actual person in the like pay toll box. But there are like electronic like lanes as well that you can go through. But still, if there is traffic, those lines will be like there will be another queue in those lines as well. So depending on the traffic on the network or the number of transactions that you want to submit, it is still might not immediately, for example, go through. If that makes sense.
It roughly makes sense, I think.
And I think like there's many aspects of like how they designed why 60-second slots to like auction it off, and like why it's a sealed bid auction, second price auction, and like just say trust me, bro. Like those mechanism designers have figured it out. Like on a high level, what I can say is that based on what I learned from Flashbots, is like sealed bid auction will encourage better like true value bidding. So it's not like everybody's looking at each other's bids like how Ethereum block building is like. And at the same time, like the second price auction will be able to have like surplus to incentivize like basically the highest bidder. So it's a good design, I guess. Yeah.
Yep. And how much does this earn now? I mean, 43%, but I think we can go back to the numbers and just kind of like see how the development of, I don't know, the revenue.
It's close to 1 million, roughly 800,000 to $1 million per month right now, depending on the price, of course, on the price of ETH
so
and the
far we
volatility.
have generated 3 million time boosted revenue, and in ETH terms it would be 1.1k rev that we have earned. So that's pretty decent, I would say. And to echo Danning's point on the second price auction as well as the 60-second window, it is very important to bear in mind that Time Boost is just a 3-month-old product, and therefore when a new product first launched, the more important aspect is to encourage participation than revenue capturing, and therefore second price and having 60 seconds would be a sufficiently attractive way to encourage participation than immediately max extraction, essentially.
I'm curious. So, like, maybe this thing is out of the scope of what you guys are looking at, but like, it helps capture MEV revenue. Does it encourage more MEV or less, or maybe because like Arbitrum is a fast chain with low gas, so it's very likely is introducing a lot of spam issue, and like would Time Boost like solved or maybe introduce more spam or so? I don't know if there's any this kind of like economics analysis going on.
That is a really good question and something we are closely monitoring. We have a dashboard ready to go out, but it is still pending. So stay tuned. I'll leave some surprise for everyone.
Awesome.
Maybe in August, maybe in September.
You
Nice.
just want to come back on the podcast. I see the play
There's only one way to find out.
here. No, fair enough, fair enough. But yeah, I think that covers a lot of topics. Yeah, I learned a lot about Arbitrum. Fantastic data work. Like I've
Yeah.
kind of glanced at your work, but like I've never taken the time to like dig through all the dashboards. So like this is like so comprehensive, and I think every DAO should be striving to have an organization like yours.
Yes.
To be in their ranks and like to contribute to that DAO, to like actually like make the DAO a DAO and like make it decentralized and kind of transparent, and like everyone can audit what the fuck is happening with everyone else. So it is a shame that you're Arbitrum exclusive. I'm sure there's a good business model to be had here, but no, like genuinely, like I mean, then you couldn't be a delegate at the same time. But like I don't know, as a general like DAO service provider, this would be like a super valuable service that like a lot of different kind of like decentralized organizations or chains or whatever could employ. But maybe there's a business opportunity for someone else here. Maybe we've just given someone an idea. But yeah, super interesting stuff. I think the audience can learn a lot from the level of kind of like rigor and in depth, and I think also super interesting how you guys like have a like it really shows that you like you know the topic matter at hand like really really well, and you have a whole team that's kind of like dedicated to like looking at the governance forums and making sure you understand those parts, and then you don't have to, because like there's only so much time in the day. Like there's no way that one like the data team cannot also be the governance team, and the governance team cannot also be the data team. So like it really shows that you like work well as an organization to kind of like facilitate like cross pollinate, cross facilitate like insights. Super good stuff. The Arbitrum DAO is hopefully very glad to have you, and it seems like it if you signed like a two-year renewal, whatever. So yeah, I think Denning, what do you think?
I was gonna say, just like after I see how Ali explained all these like percentage and then like the time in the slot, I was like, no wonder you guys say you are in the trenches. Like he can just recite all these like parameters. That is crazy. And just I've learned so much today about the Arbitrum governance, and it seems always from outside being like, oh, why are you guys like spending so much big money? And but it's all through very thoughtful process and like with participation. And now we can see all that in data. So that's like shout out to you guys. And now if I want to know what's the next coming proposal or how you guys are spending, I just go pull your dashboards. That's awesome. And like I want to just like say, like every like legendary wizard always have some crazy things in their dashboards. Like Heldabi, I think like Michael Sebling has like emoji or like some links or kind of things that you can configure. Today I learned you can do expandable table on Dune. What? I've never seen that. That is insane.
Pivot tables. You
Yeah.
can't imagine how much work it was to get pivot tables in a working in a web app, and then it's like
I'm talking about like the plus and minus sign.
yeah, that's pivot.
Oh my
table.
god! Like what?
Yeah, you can have like actual functionality inside of Dune. It's this is by far the best application of pivot table. I mean, you and Steakhouse, you basically like you've probably like found some inspiration from Steakhouse works on this. Yeah. So hopefully more pivot tables in the future. This is definitely like if anyone asks me what this feature is about, I'm definitely gonna show them this video or that dashboard. It's like this is so good.
Yeah. Any words for you guys?
Thank you very much for having us. Obviously, super happy to be here because we believe there is a gap on the knowledge on Arbitrum DAO, obviously, and specifically on Time Boost as well, because Time Boost, as mentioned, is a 3 months old transaction ordering and MEV capturing mechanism. And it is very different from what every EVM chains are having nowadays. And therefore, we believe it would be a great cadence to just educate the audiences, and Ali specifically here is super passionate on like sharing more on like what Time Boost is, and he wrote a really good thread on that. So highly encourage the listeners to check it out if you're interested to dive deeper into Time Boost in the future. And be remember to check out our dashboard, give it a stars, and keep an eye on what we're going to ship in the future. A lot of exciting stuff.
and Delegate to Entropy Advisors.
Exactly.
You're actually becoming a centralization vector.
7%, not
7%. No, fair enough. No, thanks for coming on. I think that's it from us. You've been listening to the Index podcast. Share this with a friend. We have a Telegram group now. We're gonna put. We saw the like there's other podcasts which also have Telegram groups which have like very active communities. So we thought, why not do this our own, and like so we can collectively gather chart crimes, or I don't know, just share good analysis or anything like that. So the link to that will be in the description below. And yeah, you'll hear from us again in hopefully 2 weeks. We'll see if that actually happens, but that's our plan. And yeah, thanks so much, Ali and Tom, for coming on. Bye.
Crypto data wizards, come join us for the parade. From Bitcoin ETF to Solana meme coin trade, uncovering public secrets in the blockchain shade. Bachelor, cherry picking liar, we call them out and set chart crime on fire.